there's a peak in residential energy demand, like during really cold months or really hot months, then Bitcoin miners, we tend to see them turn off their machines. Bitcoin miners, they'll buy all the excess power and they'll turn off when the residential community actually needs all of that power. And can't quantify exactly, 5% of the reason hash rate declined is because of the weather, and the other 5% is because of the Bitcoin price. You have to take all of the components in the aggregate, but they're certainly both at play here. You could expect hash rate to grow less in 2026 than it did in 2025 because
Mitchell Askew is a high-conviction Bitcoiner, turning complex mining data into clear, investable insights for serious capital.
As head analyst at Blockware, he helps investors stack sats.
You got Strategy and you got 21, who has quite a lot of ground to catch up. It's all about which pools of capital in the world you can tap into. If 21 can tap into the US debt markets in a way that no other company can through something like a bit bond, that's going to be their path forward to catch Strategy in terms of quantifiable Bitcoin holdings. I don't think any amount of Bitcoin podcasts would have changed Larry Fink's mind, but what changed his mind was, but Wall Street did end up embracing Bitcoin. Why? This is the entire reason Wall Street is now all in on Bitcoin.
Hey guys, welcome back to Less Noise, More Signal, and welcome Mitchell. Welcome to the show.
Pascal, thanks for having me. I'm excited to chat today.
Yes, it's great to have you on the show. So Mitchell, he's with one of the co-sponsors of this show, which is Blockware. We will surely talk about this as well. So very happy to have Blockware, and then also very happy to have you, Mitch, on the show today. Maybe, if you could quickly introduce yourself and also tell the audience why you are so a vivid Bitcoiner, that would be great.
Yeah, that's a great question. So I'll start from, I guess, day one on my Bitcoin journey was about 5 years ago. I was in college at the time, and we had all these COVID lockdowns, and government tyranny was at an all-time high in my perception. And I discovered Bitcoin, and I realized they can't make more of it. It's non-inflationary, and the government can't control it. And so I was hooked from that day. I was about 20 years old, and then I went full force down the rabbit hole, listened to all the podcasts, read all the books, watched all the documentaries, did everything. I was all in. And then I got a job at Blockware during my senior year of college. So I was pretty gung-ho on working in the Bitcoin industry because the last thing I wanted was like a 9-to-5 office job that I just hated, working on something I didn't care about. And so I actually started at Blockware working for free. I was like, hey, I'll do anything. Just like, let me get a chance to prove myself. And then once I graduated from university, I was brought on full time. And then my role has kind of evolved over the last 4 years. Now I focus primarily on research and marketing. So I'm constantly reading and writing about the Bitcoin market, Bitcoin mining specifically. And then we use that research to inform our clients. So we have hosted mining clients all across the United States. We run or partner with about 7 different data centers. And anybody who wants to mine Bitcoin, they can mine it at one of these data centers. And then my research helps people make an informed decision on whether or not they want to mine Bitcoin.
Yes, interesting. Exactly. Speaking of research, like what is the latest things that you come across that you have just shared with people and clients, and what you yourself think is very interesting and maybe somewhat misunderstood as well when it comes to Bitcoin? Anything?
Great question. So I could go Bitcoin more broadly or Bitcoin mining specific. I'll start with the mining aspect because that's probably less frequently discussed on your show. I have my hypothesis on the 4-year cycle, Bitcoin price action, all that sort of stuff, which we can unpack later. But one thing I've been looking at specifically as it pertains to mining is the seasonality of hash rate or the amount of Bitcoin miners on the network. So it's no secret that in 2025, a majority of the hash rate, or about half, is domiciled in the United States or the Northern Hemisphere more broadly. And what we've seen over the years is Bitcoin miners have become more integrated with energy grids, responding to demand. So if there's a peak in residential energy demand, like during really cold months or really hot months, then Bitcoin miners, we tend to see them turn off their machines. Additionally, they may wind down some of their operations temporarily during inclement weather, simply because it's difficult to keep your miners online if it's a blizzard or a heat wave. And so over the past month and a half, since late October, the hash rate on the Bitcoin network is down about 10%. And we've seen similar curtailments last winter, this previous summer, the summer before that. And so we're just starting to see this play out on somewhat of a consistent cadence over the past few years. And additionally, the Bitcoin price being down certainly impacts the mining ecosystem. So mining, I like to use this analogy when you're out camping and there's a bear. In this instance, there's a literal bear in the Bitcoin market making the price go down. But in the camping analogy, you don't need to outrun the bear. You just need to outrun the slowest friend in your group. And so Bitcoin mining is kind of the same way. So if you're running the most efficient machine, the S21 XP, and you have low cost electricity, you have pretty wide profit margins. And so even if the Bitcoin price goes down, the miners that have less efficient hardware and higher electricity rates, they're going to unplug their machine first. Mining difficulty is going to automatically adjust down. You're going to start mining more Bitcoin. And so your profit margins can actually stay relatively stable even during Bitcoin price dips like the one we're seeing. So these are a couple of dynamics specific to mining that I've been paying attention to over the past month.
Yeah, for sure. That's very interesting. Can you talk to what you just said, in terms of like Bitcoin miners and the integration with traditional grid operators and how that actually works and how Bitcoin miners can be somewhat of a benefit to them as well?
Great question. So Bitcoin miners are effectively an energy buyer of last resort. So if you're a power company, you want to be able to service the residential population during times of peak demand. So right now it's December. It's really, really cold. There's a massive cold front running through North America, which is why I sound a little stuffed up because I caught a cold myself from all this cold weather. But you want to be able to service that time, right? Because energy demand during these times is way higher than kind of the typical baseline level throughout most of the year. So you want to be able to service those peak moments, but you don't want to have so much waste throughout the rest of the year because energy production is very capital intensive. And so you have to invest all this capital up front into the infrastructure. You can't actually just like with the click of a finger scale production up and down. You have to have the resources to service max capacity. And so what do you do with all of that excess power throughout the rest of the year? Especially when you consider most power producers are basically in the middle of nowhere. You don't have a power plant right in the middle of
Nice.
downtown Manhattan, right? It's hundreds of miles away in a very rural location, and then you transport the energy into the major population centers. And so what kind of large power consumer can come to the middle of nowhere and buy power consistently 24/7 and also stop consuming that power during times of peak demand? Well, it's Bitcoin miners, and they're quite literally probably the only energy consumer with this profile. You could say AI and high performance computing servers, somewhat similar, but they're less likely to be able to actually turn off, right? Because if your servers are powering some websites or whatever, LLMs, like you can't actually just turn that off. Versus Bitcoin miners, you can basically turn them off. Yeah, you're not going to be mining Bitcoin, but typically the arrangement works like something like this, where the power company will offer lower electricity rates to the Bitcoin miners in exchange for a contractual obligation to turn off when demand is above a certain threshold. So this was a big, kind of spiel and a mouthful, and people who aren't fully immersed in the world of energy and Bitcoin mining may not understand it. But to kind of put a bow on it and say it simply is Bitcoin miners, they'll buy all the excess power and they'll turn off when the residential community actually needs all of that power. And so this idea that Bitcoin miners are wasting energy or they're taking power from everyday people, people are going to freeze in their house because all the Bitcoin miners are taking the electricity. It's just not true. And in fact, Bitcoin miners, they're consuming power that otherwise wouldn't exist. Otherwise, grids wouldn't have a surefire financial incentive from the free market, mind you, to produce that much power. Because you could, band-aid with government subsidies and incentivize, the production of certain, wind and solar farms. And we've seen certain administrations do that. But when it comes down to the true free market economics, it's actually not necessarily profitable to put all of that infrastructure in place unless you have Bitcoin miners who are there to monetize those energy production assets.
Imagine lowering your tax bill while stacking Bitcoin. With Blockware, you can. Thanks to new tax guidelines, you can write off 100% of your mining hardware costs in a single year. Blockware's mining as a service takes care of everything, so you can start mining Bitcoin effortlessly. Visit mining.blockwaresolutions.com/LNMS and get $100 off for your first miner.
Yes, yeah. I mean, that's the beauty of Bitcoin being this decentralized network, just as you said, like some of the miners, they can hop off, they can literally just unplug their machines and then the network isn't down entirely, compared to something else, which is more centralized. And you can still have it running, but then it can actually, yes, alleviate some of the pressure, as you said, on the grid operators that maybe is coming from somewhere else because demand is so high in terms of energy right now. So that's very interesting and beautiful. I want to ask you, this is maybe a little tangent, but you said it yourself in the beginning. You were sort of orange pilled through the monetary scarcity argument. I would say, Bitcoin being the scarcest asset ever, which is something that resonates with me as well. I mean, I talk to some people at the business school that I lecture, and this argument just doesn't cut with them, and so I'm always looking for other arguments apart from the monetary argument that can kind of show Bitcoin in a different light, and I feel like this is one of the arguments, which in that it has something to do with the network in and of itself, but you can explain it to somebody like this is a real use case that Bitcoin has, like really helping these grid operators smoothen out these demand shocks and everything. And so that's a real world use case, which I find so interesting. So maybe, yeah, you have some comments there as well, but that's just interesting because if we were to assume that maybe we have maxed out on getting all the people we can convince through the monetary argument, which for argument's sake, we just assume now, I don't think this is the case, but like we have some other arguments to throw in there, so to say, right? So
Yeah,
that's so
that's a great
interesting.
point. And it's there's a lot of different angles you can take to educate someone on Bitcoin. I like the mining aspect, I like the scarcity aspect, but you certainly have to be able to tailor, if we're saying, hey, our goal is to orange pill as many people as possible, you're not going to take the same approach with like a radical right wing person as you would a radical left wing person, or a finance bro versus like a real estate bro or an oil mogul, or like, not to say a homeless person, that would be hyperbolic, but like someone in poverty, right? You got to tailor your argument based on who you're talking to. And so I think it's important to be able to discuss Bitcoin through multiple different lenses and frameworks.
Coming back to this argument, in terms of like the weather conditions now impacting Bitcoin miners, I can already hear a critic, pushing back, or push back and say, well, in theory, this all sounds neat and sound, but like, is it actually the case in practice? Well, how do you infer that there's a connection between declining hash rate and Bitcoin miners turning off their machines because of this increasing demand? Isn't it just, as you said it yourself, it's just the price, that's down and that's why everyone is unplugging. So is there like a way we can pinpoint this and say, well, there's like real arguments and real numbers maybe that show that this is actually happening?
Yeah, that's a great question. Well, I personally know sites that have curtailed some of their power usage here recently. And many of the public miners, this is a big enough financial avenue where it's a line item on their balance sheet. So the setup for curtailment and demand response looks a little different for everyone, but some miners will have an arrangement where they actually get paid to turn off. And so you'll see that as cash flow on their balance sheet where the grid says, we're going to give you this money to turn off during this time when demand is a certain level. Additionally, it is an incentive for them to get a lower rate throughout the rest of the year. So, the power producer will say, hey, instead of offering you 5 cents per kilowatt hour, we'll offer you 4 under this stipulation that you have to unplug during these certain times. So at this point, it's fairly well documented that large scale Bitcoin miners and even smaller to medium scale Bitcoin miners are participating in these programs. And additionally, the last sort of evidence for this is some power companies, they offer a variable rate. So fixed rate power is kind of a myth within the actual world, right? Because you can't actually fix prices. Prices are a signal of supply and demand, but you can have a fixed price over a certain duration of time. However, electricity rates can be variable, especially if you're a large consumer. And so what happens when demand increases? Prices go up. And so if you're a Bitcoin miner, all of a sudden, you're mining profitably and then your power rate goes up 50%, and now you're not actually mining profitably. And so there's a natural incentive beyond a contractual obligation to unplug your machines.
Yeah, it makes a ton of sense. And especially like as you said it yourself, like personal evidence. I mean, that's what I'm hearing from talking to other people who have been at least are in contact with public Bitcoin miners, that this is actually the case. And as I said, in theory, it makes total sense. But if you can kind of put some weight to it in practice, this is something that makes the argument even stronger. Coming back to the declining hash rate as well, there's some people who have been looking at this, and as you said it yourself, like somewhere mid-October it peaked, and is now in a steady decline. And so to what extent this is the case because of the weather conditions, it's probably hard to really quantify. But then, as you said it yourself, there's also maybe some people unplugging. There are some people making the argument that we have seen this before in this cycle, where maybe the price was sort of dropping, but then the hash rate just went going, like it went on, it didn't sort of pause. This time it is sort of rolling over. And so some make the case that miners might be expecting a prolonged downturn, or maybe just like a consolidation phase. And that's why they're plugging off, because like if they're only expecting it to last for a couple of weeks, they're like, okay, we can mine at a loss and then it's all going to be good. So I don't know, what do you make of this argument? Is there some weight to it that miners who have to kind of think in these sort of periods as well, that they're turning it off because they're expecting some longer
Great question.
consolidation?
So I would say yes and no. What we've seen historically is minor capitulations, as you might call it, when miners unplug because they're no longer profitable. They do tend to mark local bottoms in the Bitcoin price with a fairly high rate of accuracy. There's a metric I like to look at, which is called the hash ribbon, and it takes the 30-day moving average of the hash rate and compares it to the 60-day moving average. And typically when the 30-day goes below the 60-day, that actually very often marks a local bottom in the Bitcoin price because miners are unplugging in mass. Now, it's fairly easy. In fact, I would say it's about 100 times easier to turn off a mining facility as it is to go build a new one and start up a new one. So when it comes to miners kind of predicting the Bitcoin price down the line, they tend to be far more responsive to what the price is now when it comes to turning off their machine. So if you're a miner and your break-even price is 100K, Bitcoin went from 120 down to 80K, you plugged off, you unplugged your machine basically overnight. But where we see this impact miners' kind of future behaviors and future development is in the build out of new facilities and the future growth rate of hash rate. What we've seen historically is there's this kind of lag between the Bitcoin price and hash rate. So let's say we'll use 2024 as an example, because Bitcoin started the year about 40K. It finished around 100K. It's a great year for Bitcoin price. And what we see is the Bitcoin price goes up. If you're a miner, you're like, man, I'm doing great. I'm crushing it. I'm going to go build some new sites. I'm going to order some more miners from Asia. I'm going to find some new land. I'm going to get the shipping containers and the transformers. And about 6 to 12 months down the line, you see a surge in hash rate because they're reacting to the Bitcoin price, but you can't build a new facility overnight. That takes a couple of months at best. And so you see that manifest in hash rate growth later. So what we could reasonably infer, and this has been the case historically, is a year like this where the Bitcoin price doesn't perform incredibly well, you could expect hash rate to grow less in 2026 than it did in 2025, because miners right now aren't actively making, I should say prudent miners are actually investing into, more infrastructure, more machines, right? Because the Bitcoin price, I believe, is going to rebound. But the average miner is definitely, approaching the market with cold feet at this moment. And we can expect that to show in the hash rate over the coming 6 to 12 months, where the hash rate will grow less because they're not making the investment today to build new facilities.
Discover the power of self-custody with Bitbox, the hardware wallet that combines privacy, precision, and world-class security. Whether you are a beginner or an advanced user, Bitbox offers user-friendly features and advanced options like coin control or optional passphrases. I have personally been using them for years, and so should you. Visit bitbox.swiss.lnms and get 5% off your first order.
You're also making some, or I've seen you share some calculations on the average production cost in terms of Bitcoin, like across the entire network. This is probably very distinct, I guess, and very like specific to each case. It really depends on where you're mining. You have other input costs except for energy and stuff like this, but in your research, have you recently looked at this, where this sort of average cost is? Because it also tends to be somewhat of not a bottom signal, but something that the price sometimes in a consolidation or a bear phase gravitates towards, So any
Yeah.
update on?
Great question. I haven't looked at the specific number in about a month or so, but it's between 90 and 100K. Now, you brought up a good point, which is it is on a case by case basis. So every individual miner is going to have a different break even price based on the energy efficiency of their machine and their power rate. So when we look at it in the aggregate, this can provide us some information. Like I said at the beginning, you want to outrun the slowest friend in your group. You don't need to outrun the bear itself. And so if you're a Bitcoin miner with a break even of $60,000, if the Bitcoin price starts to dip, all of the miners at 65, 70, 75, 80, they're going to unplug before you. And so when we see the Bitcoin price start to dip below the cost basis of certain miners, it does indicate a bottom typically for a couple of reasons. One, generally commodities don't tend to trade below their cost of production, whether it's oil or wheat or gold or cattle or Bitcoin. If they do, it's only in extreme market conditions that don't tend to last very long. So that's one aspect of it. But second, let's imagine the Bitcoin price is going down. Which miners become unprofitable first? Well, it's the ones that were selling the majority of their Bitcoin to cover their operating expense. So if your break-even price is $80,000 right now, Bitcoin's at, I don't know, 85, 90, you're selling pretty much all the Bitcoin you mine just to pay your power. And so if the Bitcoin price dipped below that, well, a miner that was selling a lot of their Bitcoin is now not mining. So that's actually Bitcoin that's not going to be sold, right? The marginal amount of Bitcoin that they were mining is going to go to the guy at CK who's not having to sell nearly as much to cover his power. And so by the weaker miners being forced off the network, that's less sell pressure on a daily basis on Bitcoin. And so this is, again, why you tend to see it mark bottoms in the price.
This minor capitulation that you mentioned, before, but this is not something we have seen just yet, right? Or have we? It's probably always hard to pinpoint an exact date, but like at least if we looked at the hash ribbons that you mentioned, have we seen this already?
Yes, we have seen it very recently. The hash ribbon has begun to flare, so to speak, which it happens for a variety of reasons, mostly either the Bitcoin price going down or extreme weather conditions. So you see it in, I think it happened in August of this year. It happened in August of last year. It happened last January, February timeline. So there's a seasonality component to it, but there's also an aspect of the Bitcoin price. You kind of have to use your intuition, so to speak, to gauge, what's, because like you said before, you can't quantify exactly, 5% of the reason hash rate declined is because of the weather, and the other 5% is because of the Bitcoin price. You have to take all of the components in the aggregate, but they're certainly both at play here.
Yeah, certainly very interesting research area for people to do further research on, because I think that's very interesting. Could be some great alpha in there if you can dissect this and then also, separate it into these different buckets and like, so, okay, this is because of weather conditions. This is because of sort of the price and everything. Very, very interesting. I wanted to ask you one more question in terms of like, you mentioned the mining hardware, and to a layman like me, this is a question that I hear often, like, so other laymen ask me, about Bitcoin and then Bitcoin mining, like, it seems so centralized in terms of like who's producing these mining devices. It's one or two, three companies max that do this. Bitmain comes to mind. Has this changed over the year? And if so, or if not, like, is this something that worries you, or how do you think about this?
What you said is true, and it hasn't really changed, and it doesn't worry me. And I'll unpack all of this. So first, you've got your Coke and Pepsis of the world, your Apple, Amazon, Microsoft. It's not rare to see consolidation at the top in any industry. So generally, I think that's a phenomenon of the free market. It's kind of a dog eat dog world in business. Additionally, we did see for the first time a US company start to put their foot into the R&D side of Bitcoin mining. And this was Jack Dorsey, who, you know, you could go down the Satoshi
Yeah.
rabbit hole. I think you could make a strong case for him, but he's been doing great work in terms of Bitcoin, right? His company Square now enable Bitcoin payments via Lightning. All their merchants all across the world, thousands of merchants. And his other company, Block, which I think Block and Square are actually technically the same company, they are looking into, they've announced their own miner. I think it's called the Proto Miner. Now, it'll be interesting to see how this actually shakes out, if they can eat a significant amount of market share. I live in America. I'm an American first patriot. I want to see America produce Bitcoin miners. I'm rooting for them. I'm not sure they'll necessarily be able to compete. We'll see. There's an interesting aspect to this miner, which is it's basically like a template, and then you can take out the chip and put in a new chip. So in theory, your cost to upgrade when new mining technology is developed should be a lot lower. So for example, right now, if you're buying from Bitmain, which manufactures in Asia, they're a Chinese company, but they do nearshore manufacturing to kind of get around the tariffs. So they technically come from Thailand and Malaysia, but it's all China. They'll make, let's say, the S21. They have terrible naming conventions, by the way. Proto Miner sounds a lot cooler than the S21. And then they'll make the S21 Plus and the S21 XP. And each successive unit is only slightly better than the previous. But if you're a miner and you want to stay ahead of the curve, you're going to buy new hardware as it comes out because you want to be competitive. You want to be the miner with the lowest break-even cost. But you're having to buy the actual new unit every time, and that's a few $1,000s per unit. Where in theory, what the proto miner purports to be is that you would have the actual casing and unit, and then you could just take out the chip and replace it with the new chip at a much lower marginal cost. We'll see how it plays out. These haven't hit the market yet. From what I understand, it should come sometime in Q3 or Q4 of 2026. It'll be interesting to
Mhm.
see, and I hope for the sake of America and for them and for Bitcoin that they're successful, but I don't necessarily view it as a threat to the network in any way right now, that a lot of them are manufactured by Bitmain and MicroBT.
Yeah, I agree with you. I was just like curious because this is something I was always wondering. Like, there should be somebody out there who might have an interest in trying to at least not disrupt, but just bring another player to the market here because it is a pivotal sort of business sector within Bitcoin. I would argue, the Bitcoin mining sector and then the hardware devices. So happy to hear about that. Jack Dorsey is sort of also pushing the envelope when it comes to these things. So
Yeah, he's
very.
cooking. And one more thing I'd add to that in terms of like Bitcoin decentralization and security of the network. When it comes to all of that in Bitcoin mining, the biggest bottleneck is just the energy production. So let's say China cuts off America. They're not going to send any, Bitmain, MicroBT aren't going to send any more units over here. We already have so many units onshore, either already plugged in or sitting idle at the moment, that the main barrier to increasing hash rate on the network is simply
Sure.
building new data centers and getting them fired up with real world power production assets. So that right now is by far the bigger bottleneck compared to, R&Ding new machines to make them more efficient and produce more hashes.
Yeah, yeah. Yeah, exactly. That's an interesting thought as well. Speaking of data centers, just one thought that comes to mind. I was just wondering because I have the feeling that this energy fund, that was leveled against Bitcoin all the time, this has sort of seceded, and I feel like it's also because there's now the AI discussion, with like the tokens being used, and this like it consumes a lot of energy, and this kind of stole Bitcoin's place in that sense. And do you have a similar experience across the sea, I guess, in the United States, that things have ameliorated, when it comes to the reputation Bitcoin mining has, it not being this very energy consuming bad thing anymore. At least that's what I feel like it's in the mainstream. They're not hurdling shit at us anymore that much anymore.
I thought that until very recently. So
Oh,
generally what you're saying, I think is generally true. In certain states like Texas, for example, or Oklahoma, where Bitcoin miners are heavily involved in these demand response programs, they're proving its value by actually providing the value. So people, especially in the energy world, can see the tangible benefit, and so they're not, they're all on board in states like that. And additionally, I think a lot of the conversation at the national level in terms of Bitcoin has focused on the financial side of things, stable coins, Bitcoin treasury companies. And I think part of this perception is just because news cycles are so quick, always jumping to the next thing. But very recently, a friend of mine, his name is Tom, he works for Satoshi Action Fund, which is Dennis Porter's Bitcoin policy
Uh-huh.
advocate group. He went and he could articulate a little bit more about his conversation, but he presented to, I believe it was in Michigan, the state legislature on the benefits of Bitcoin and Bitcoin mining. And most of the pushback he got was around the energy consumption aspect of it. So I think there's still a vast majority of people in positions of power that aren't fully on board with this idea quite yet.
Hey guys, I'm thrilled to share my new book, The Bitcoin Enlightenment, co-authored with Mexican billionaire Ricardo Salinas. Make sure you grab your copy now and learn about how one of the richest people in all of Latin America thinks about Bitcoin. You'll find the link in the show notes.
That could be very well the case, just because it might not be that people have really changed their mind on Bitcoin. It's just that there's a more pressing issue nowadays with AI, and that's why they pivoted to criticizing this. But the back of their mind, you're still criticizing Bitcoin when you're actually when asked or being asked about it. So this could be very well the case. So there's still a lot of education that needs to be done in the near future, I guess. That's for
There
sure.
certainly is, and it'll take time, and we can do all our podcasts or write books and articles about it. But I think primarily the biggest thing that will bring more people into Bitcoin is just number go up. Because at the end of the day, people can try as they may. The financial incentives are really hard to resist. Even if you're Elizabeth Warren and you're radically anti-Bitcoin, this is the entire reason Wall Street is now all in on Bitcoin. And this could segue into something else we planned on discussing, which was 21. But Wall Street had no incentive to adopt Bitcoin for the longest time, right? It's this asset that really goes contrary to a lot of their infrastructure and their system and their values. Bitcoin represents freedom and the ability to be your own bank and be fully sovereign. It's a finite asset that can store your value, right? You don't have to go and speculate in the markets just to keep the money you've already made. You can just buy Bitcoin and, do what British Hodl says, don't talk about it, and get fabulously wealthy. But Wall Street did end up embracing Bitcoin. Why? Because there's a financial incentive to do so. And I don't think that's inherently a bad thing or something we should resist. And that incentive is going to ultimately impact everyone because Bitcoin is the best money. Money touches every area of the economy. Even the Elizabeth Warrens of the world, they will ultimately adopt Bitcoin merely because of attrition and the eroding value of fiat. Bitcoin just wins by surviving for the longest period of time.
Yeah, great points. I also believe that it's incentives that really move the needle on stuff. It might not even be education, which is very helpful. Otherwise, yeah, I wouldn't do it. I guess other people wouldn't be doing it. But I feel like it's really the incentives in the real world that kind of make things shift. And as you said, we can see it with the grid operators. I think the reality about Bitcoin or the perception about Bitcoin and energy will change the more like these grid operators, just normal people working in the actual industry, adopt Bitcoin for its benefits that it kind of provides them. And so this is something that we will see going forward. But you mentioned Wall Street, and so I wanted to ask you, because you also had this very interesting take on the Wall Streetization, I'd say, of Bitcoin. A lot of Bitcoiners eye this very critically. They're like, okay, I'm throwing in the towel. This has never been the goal of Bitcoin. It's been designed to be like this libertarian thing that Wall Street would never touch. And here we are, Wall Street is actually embracing it. But you had sort of a different take. So if you could let us know what your thoughts are, this would be great as well.
Great question. So when you say the goal of Bitcoin, I kind of chuckle a little bit because Bitcoin is just a neutral, tangible asset. It has no feelings. It doesn't.
Who defined the
Right,
goal? Yeah.
exactly.
Yeah.
And so my goal, what I would like to see for Bitcoin is it be the best asset at storing my value across time. Now, I'm going to say something and people in the comments are going to say, you're just a privileged first worlder. Payments is not a problem for me. I can swipe my credit card. I can use Venmo. I can do all this thing. I can move money around very easily. Bitcoin doesn't solve a problem there necessarily, unless I'm doing international exchange, which in that case, it certainly does. But most of my commerce is domestic. What Bitcoin solves for me and what it solves for Jamie Dimon and Howard Lutnick and Larry Fink is we want an asset that I can put my wealth in today and it will be worth the same or more 1 year from now, 5 years from now, 10 years from now. I'm a store of value maximalist. That's what I care about. Why? Because the dollar can't store value. I want to be able to buy a house, buy grass-fed ground beef, get a nice car, support my family, take my family on a vacation, do all these things that you used to be able to do on an average income. You can't now because the price of goods and services continues to increase. So I need an asset that can increase in value or price at the same rate that the currency loses value or faster. And that's Bitcoin. I could become a full-time market speculator and try to, pick and choose and trade different assets and do all that stuff and keep up with inflation that way. But I don't want to do that. I just want to buy something that will retain its value over a long period of time. And that's Bitcoin. And like you said, incentives are more important than education. I don't think any amount of Bitcoin podcasts would have changed Larry Fink's mind. But what changed his mind was Bitcoin being the best performing asset for a decade and a half. What changed his mind was, hey, I can get a 25 basis point annual fee by putting out IBIT and it being the best performing ETF by far in all of human history, generating tens of billions of inflows per year. So Wall Street is following the same incentives that I am, which is Bitcoin is an elite store of value. It's better than gold. It's better than real estate. It's better than equities. And so they're simply embracing it for that reason. And additionally, this world where Bitcoin hits $1 million, because people can say that they don't care about that. They can say they don't care about number go up. They're in it for the freedom. Bullcrap. If Bitcoin wasn't $100,000 today, 99.9% of us wouldn't be here. Bitcoin people, we're here because it's gone up an incredible amount over the past decade and a half. If Bitcoin is $5, none of us would be here. And so if we want this trajectory to continue, if we want Bitcoin to continue to be a well-performing asset, retail investors, dollar cost averaging $200 a week isn't going to slice it. That's not going to get us to 7 figures per Bitcoin. We're going to have the Wall Streets of the world input their capital into Bitcoin. And this is precisely what's happened over the past 2 years. I encourage it. I also encourage self-custody. I want Larry Fink to pump my bags. I don't trust him worth the salt, right? I'm not buying IBIT. I'm holding Bitcoin in cold storage. If I held Bitcoin, I lost all of it in a boating accident. Anyways, so you can still do all of these things, right? It doesn't have to be, one or another, Wall Street or self-custody. It can be both. And additionally, I got a lot I can talk about here. I'll get off the soapbox in a second. But the last point is you can't stop them, right? Going on Bitcoin Spaces or Bitcoin Podcasts or Bitcoin X and just complaining about Wall Street and the fiat maxis and the suit coiners doesn't stop them. It's a permissionless network. And so I don't like to complain. I like practical applications and solutions. The solution is if you're worried about that, if you're worried about paper Bitcoin and Wall Street and manipulating things, just buy Bitcoin and take it into cold storage and you don't have to worry about any of that.
Very well said. I totally agree with this. And yeah, to your point, again, Bitcoin is a decentralized, open, permissionless, monetary protocol, as Jack Mallers, used to say or still says, and so this is the beauty of it. Everyone can build upon it. And so I think if you have people who still want to build the Lightning Network and other layers, that are really bulletproof and that then maybe people, because you mentioned the first world privilege, that you and me have, me being from Switzerland, you from the States, I'm totally not against this. People can go ahead and do this, and this is the beauty of Bitcoin, allowing them to do so. But then on the other hand, as you said, there are these incentives and we do have our first world problems as well. And it's very significant problem that hasn't been solved for hundreds or thousands of years. And now Bitcoin came around. And that's why this is very interesting. And I'm totally with you that this is the beauty of Bitcoin in that sense. 21, you mentioned the company, I think already, and I want to get into this as well, because I want to frame it this way, because the 2025 for me was a lot of excitement with Trump coming into office. We had the SBR discussion, strategic Bitcoin reserves, the bit bonds, all these very interesting tools. Again, where I would theoretically think from an incentive perspective, this has to come, because it makes a lot of sense, but then soon now, or like we're now at the end of 2025, and a lot of this hasn't materialized maybe in the way some of us have hoped, and so I feel like maybe you have some thoughts on why it hasn't materialized. And then also I believe that like companies like 21, these very powerful entities in Bitcoin native, so to say, they might be the ones bringing these type of products to the market. And so if you could elaborate on this as well, that would be great.
Great question. I love the way you set that up there. So in terms of 2025, very disappointing year Bitcoin price-wise, but in hindsight, Bitcoin went up 150% in 2023 and then 100% in 2024. So that's a cumulative growth of about 400 to 500%. So it shouldn't be a surprise to any of us that we had a down year, right? We went up 5x from the bottom. In 2022, Bitcoin hit 16K after FTX blew up. 2 years later, we're over 100K. That's 500%. So we really shouldn't be that surprised that Bitcoin kind of consolidated here. Where the Wall Street adoption comes into play in all of this is I believe Bitcoin may have had a much worse, a far more devastating drawdown than we did if we didn't have Wall Street come into the market, because long-term holders have sold over 1 million coins during a few different waves of sell pressure over the last year and a half. But what's bullish to me, especially looking forward to 2026, is we actually had the demand to absorb all of that without the Bitcoin price really taking a hit. And that's, layered on top of this is all the macroeconomic uncertainty of this year. When Trump won about a year ago, and we were in that lame duck period where he won, Biden was still president, we're waiting for the inauguration. There were a lot of narratives prevailing at that time. Rate cuts, Trump's going to be the president that boosts the market, stimulate, strategic Bitcoin reserve. Not a lot of that played out. When he got into office, he started throwing a wrench into different things. Now, we could argue whether or not that's good for America, take a short-term hit in the market, right? Doge, let's cut a bunch of superfluous spending, tariffs, let's start making stuff in America again. I'm generally for a lot of those things. I'm not against that. But the trade-off is we did have short-term pain in the market. We did have a lot of uncertainty because people didn't know what he was going to do next. People didn't know what any of the impacts will be. And so Bitcoin doesn't necessarily perform well in uncertainty. During times of uncertainty, what performs well? Gold. Gold had a great year. Treasury bonds did okay. We're actually, for the first time in about 5 years, we're going to see TLT, the long bond ETF index, have a green year. The risk-free reserve asset of the world had 5 consecutive red years. I think 4 or 5 since going back to 2020. It might just barely break even this year. So, bond bulls, they can take a victory lap for now. But none of the bullish catalysts we were talking about a year ago necessarily played out. And so in hindsight, that was certainly like a euphoric blow off top moment. I mean, Trump and his family were launching meme coins on Solana. What more do you need to see that like crypto broadly is in a blow off top moment? But I'm very, very bullish on Bitcoin in 2026. I don't buy into the calendar boys, the 4-year cycle, blah, blah, blah. Bitcoin has to go down for a variety of reasons. To keep it simple, Bitcoin made a new all-time high before this quote-unquote cycle began. It made a new all-time high right before the end of the last halving epoch. It kind of, all that got thrown out the window. We're going to see this year likely close red. And additionally, in 2025, despite Bitcoin being down on the year, we're off 30% from the highs. The ETFs in the aggregate had $50 billion in net inflows. So $50 billion of new capital entered the ETFs. We've seen ETFs have net outflows over the past month as the Bitcoin price drew down, but only marginally, right? Generally, these have just been a vehicle of straight up like agnostic, price agnostic, emotionless Bitcoin accumulation. They're just sucking coins out of the market. They don't care. They're not nearly as reflexive as retail investors on chain. And so I expect this to continue into 2026. And we're not, in my opinion, going to see the same amount of sell pressure that we did in 2025 from people cashing out at the nice round 100K. Additionally, I think we're going to get a little more clarity on the macro side of things. We're going to get a new Fed chair likely. Rate cuts are going to be a lot more transparent. We're not going to see, more more tariffs, more Doge, more of that kind of stuff. I believe the administration has a strong incentive to have markets pumping going into the midterm. So I think all of the things are shaping up very nicely for 2026 to be a bullish year for Bitcoin. Additionally, I think we're starting to see the tides of risk on come back. So one thing I'm looking at specifically is the Russell 2000, the small cap stock index, is already making new all-time highs. That's not something you see during risk off. Gold is really starting to draw down and cool off. Again, not something you see in risk off. We're starting to transition back to risk on. Liquidity is going to continue to rise, not to mention the Fed's going back to QE. Like, hello, could you get a more bullish green flag than that? So I think 2026 is going to leave a lot of people hanging in the dust that thought they were clever. I'm going to sell Bitcoin in Q4 because, we have to have this bear market for some reason. I'm going to buy it back a year later. I think those people are going to be surprised, and not in a good way.
Yes, I see. Very interesting. How do you see like these Bitcoin heavyweights, play into this? Like I'm referring to companies like Strategy. We know Strategy has been buying a shitload of Bitcoin, so to say. 650 plus thousand Bitcoin that they have on their balance sheet. But then there's also like 21. That we mentioned already. And you had this line where you said it will be the most powerful entity in Bitcoin. And so how come?
Yeah, sorry, your original question before that was
All
about
good.
21, and I went on a tangent, so sorry about that.
All
Um,
good.
a year ago, Strategy only had about 250,000 Bitcoin. So think about where the price would be if they didn't stack that incremental 300,000 Bitcoin. But on 21, I say the most powerful company in Bitcoin. And when I say that, it's not an endorsement of their equity. We've seen some of these Bitcoin treasury SPACs totally flop. I mean, Nakamoto's down 99% from its all-time high. So I do not, I'm pretty neutral on the stock. Maybe it'll go up a lot. I really don't know. But when I say the most powerful company in Bitcoin, this is what I mean. Their network of backers is the most deeply entrenched people in all of finance and really all of politics in the world. You have SoftBank, you have Tether, and you have Cantor. Cantor is one of 24 primary dealers with the Fed, directly buying and selling treasuries with the central bank. You want to talk about being close to the money printer. That is quite literally like you're underneath the faucet. You have Tether, which is the fastest growing company, most profitable company per employee in the entire world. They are one of the largest buyers of US treasuries, and they're only increasing their rank there. I think they're number 17. They'll surely be top 10 within probably the next couple of years at the latest. And then you have SoftBank, which is a massive conglomerate based out of Japan. They are invested in all sorts of different funds. They have trillions of dollars under management. And so this team, when you start mapping out, I did a video mapping out all the connections, right? You've got the Lutnick family, you've got the Trump administration, you've got the Fed, you've got the Treasury, you've got Tether, you've got SoftBank, you've got the Abu Dhabi Sovereign Wealth Fund, which works with SoftBank, and they work with the Trump family on certain, they were heavy investor in World Liberty Financial. This is like the entity, right? And then they've got the perfect mouthpiece for it, which is Jack Mallers. And I don't say mouthpiece in like a demeaning way. Jack, he's built one of the, in my opinion, I love Strike. That's what I use personally. Best Bitcoin exchange in the United States. He's basically the reason that El Salvador went on and made Bitcoin legal tender. Jack, his accomplishments stand on his own. But when I say mouthpiece, he can articulate Bitcoin in a way that 99.9% of even Bitcoiners can't. He understands the plight of American Bitcoiners. He understands the plight of third world Bitcoiners. He's built products to provide real tangible solutions. So he's the perfect guy to put at the helm of this entity, which has this massive backing underneath it. Do I think they catch Strategy in terms of real, quantifiable Bitcoin holdings, right? Strategy's over 600,000. I think it's unlikely, but it's the only entity with a non-zero chance. Every other Bitcoin treasury company, Metaplanet, Nakamoto, what's Pomps is, I think it's called Burr. None of them have a chance, in my opinion. And I like those companies. I like those guys. I like the people leading those companies. But none of them have a chance to catch Strategy, not even close. In fact, they all explicitly talk about we want to be the second largest holder of Bitcoin. 21, they put on the winning mindset. They say we don't want to be the second best. We don't want to be the second largest. And if there's anyone with the resources to do it, it's them.
Yeah, it makes a lot of sense to me. I mean, because like, as I mentioned a little earlier, like the bid bonds and all these discussions that we had, and like people were hoping for governments to actually issue an actual bid bond or something. And I always had like the feeling this is not going to happen anytime soon, like if you understand how governments actually function. And so this is where I think the rubber meets the road, in the sense of like 21 having all these very powerful entities in the back, as you just mentioned, and so it can really turn into this public-private partnership, where they actually then issue these type of notes, bid bond structure, like where you have like treasuries backing almost all of it, but then you have this Bitcoin component added to the mix, and this is how these products can actually proliferate on Wall Street. And I think that's also where you're coming from when you're saying they have a non-zero chance, because like if these products then kind of catch on, then they could actually try to catch up with strategy, even though it's going to be very, very hard. But like as you said, they have a non-zero chance just because of this, and so that's what I find so fascinating in that sense. Yeah.
Yeah, I totally agree. And I'll elaborate further on that, which is the race to catch strategy, which isn't really a race. It's a two-man battle. You got strategy and you got 21 who has quite a lot of ground to catch up. It's all about which pools of capital in the world you can tap into. And we'll start with strategy and kind of work our way through their strategy, for lack of a better word. They started stacking Bitcoin just with their free cash flows. And that's great, but that's limited. Then they started issuing equity and debt to buy Bitcoin. Then they did their convertible notes. Well, they kind of tapped that market out, right? The convertible debt market isn't that big. So then they issued their preferred equity. Well, they're very similar in structure to debt, but technically they're still a preferred equity. If 21 starts to issue bit bonds, which I think is very, very likely, they're tapping into the largest pool of capital in the world, which is the $300 trillion debt market. And so if they can tap into that in a way that strategy can't, which, it looks like strategy just launched Stream, which is like a European-based preferred equity. They're already like basically tapped out of American capital markets. Not entirely, but you can see they're shifting their focus elsewhere. If 21 could tap into the US debt markets in a way that no other company can through something like a bit bond, that's going to be their path forward to catch strategy in terms of quantifiable Bitcoin holdings.
Yeah, so fascinating. It's going to be very interesting to see how these big heavy hitters, as I said, are going to navigate this market. But it's so
Yeah,
interesting
and one
to
more
see.
point there, because I know this sounds very like conspiratorial and as if there's no basis here, we're just all speculating, which we are, but we live in an oligarchy, which is basically an obfuscation between governments and powerful private companies. The line between them has gotten a lot blurrier over the past
Mhm.
couple of centuries under fiat money, under central banking, right? It's the Federal Reserve. Are they public or private? Nobody can really tell me that. And so here's an example of what I mean when I say that public companies or, private businesses, whether they're publicly traded or private, they can do the bidding of the government. One example of this was free speech and censorship. So under the previous administration, they wanted to censor speech online, but they have a big problem, which is called the First Amendment. They, as the government, can't do that, but they made YouTube and Google and Facebook the enforcement arm for their desired policy. If this administration desires to increase demand for US treasuries via a bit bond or something, government, there's a lot of roadblocks with Congress and with all that, the government system to actually make that happen. The enforcement arm of that would be a business like a 21. So I think there's precedent for seeing companies do the work of the government. Additionally, we've seen SoftBank already partner on an AI project with the government. So I think the precedent is absolutely there for 21 to be some kind of public-private partnership where, the goal of the treasury is they want to get the 10-year rate down. That's all Scott Bessent was talking about at the start of the year. Get the 10-year rate down, get it down, get it down. There's not a lot of natural demand for it. How can you stimulate demand for the treasury market? Pair it with Bitcoin, pair it with the hard assets.
Wow.
So the note holder actually has upside and you're not just totally getting debased in real terms.
Very interesting. Wait, just to quickly throw in my 2 cents here as well. I mean, the book that people can see behind me, the Bitcoin Enlightenment. I mean, in one of the chapters, we elaborate on this, like historically speaking. You can go back all the way to the establishment of the Bank of England. And there, like these, you can clearly see how like private and governmental interests were merged all together. Because like back then, kings had to kind of raise money always from these private people, and that they were the incentives were always kind of against each other, and they were actually keeping each other in check. But once the Bank of England went live, and it kind of usurped these interests, like the government with the private interests, then you could unleash all these things which are nowadays, yeah, wreaking havoc, so to say, when it comes to the fiat system. So this goes back a long, long time and is all documented in history. So yeah, I wouldn't be surprised to see stuff like this now also going on with these companies that you mentioned. Well, I mean, we've coming up on the hour here, so I want to ask you a couple more questions, just in terms of like on Blockware, because you have some very obviously first-hand informations to share. Maybe you can summarize again what Blockware is, and then also what are some of the new products that you guys are cooking and having up your sleeves.
Great question, and I appreciate you teeing me up for that. So I mentioned before, some Bitcoin miners have a break-even price of $60,000 per Bitcoin. So you are effectively DCAing into Bitcoin at 60K, but you have to have a specialized computer to do that, and you have to have low-cost electricity. You're not going to have low enough power at your house to do that. And so Blockware has data centers around the world, around the United States rather, where you can buy a Bitcoin miner, run it at one of our facilities, and mine Bitcoin for $60,000 a coin. And additionally, this is a new law, a new tax code under Trump. So thank you, Trump, for this. You can depreciate 100% of the cost of a Bitcoin mining computer in the first year. So in 2025, if you bought Bitcoin miners and you put them into service this year, 100% of that cost can be deducted and offset income. Simply put, if you had $1 million in income, you could buy, in theory, $1 million of Bitcoin miners, depreciate them all to zero in year one, offset that income, and legally have zero taxable income for the year. Now, consult with a CPA and a tax professional, but this is a strategy we have been helping investors execute on all year long, and it's really a bullish catalyst for Bitcoin mining. The Bitcoin price is down, but at Blockware, we've been busier than ever. And I think we talked earlier, Pascal, about different ways you can orange pill people and different incentives you can create. And this is one of them, because we're seeing a lot of people that otherwise would have very little interest in Bitcoin or Bitcoin mining start to dip their toe into Bitcoin mining. That's becoming like the vehicle for people to get into Bitcoin because of the tax write-off. So I'm talking just, random business owners, people with a consulting business or a medical practice or like a heating company. These are the types of people we've seen come to Blockware over the past 6 months. Previously, zero knowledge or interest in Bitcoin, but the incentive was created for a tax write-off. And so they can buy this computer that effectively prints money, and then money comes in the form of Bitcoin, get 100% write-off, lower their taxable income, and start stacking Bitcoin. This sends them down the rabbit hole. Now they want to keep all the Bitcoin they mine, et cetera, et cetera. And so we talked a lot today about incentives. And when it comes to taxation, that's the entire reason we have different forms of taxation. It's not to generate revenue, because we have this central bank. They can print money. If it was about money revenue generation, they just print the money. So taxation is about creating certain incentives to incentivize certain behaviors or disincentivize others. The ethos behind this tax write-off, which Bitcoin mining is not the only asset that qualifies for it. There are other assets as well, but it's to stimulate growth. It's to incentivize business owners. Instead of giving that capital back to Uncle Sam, who we know will waste it, let's keep that capital in the pocket of business owners by incentivizing them to purchase more capital for their business through the write-off. One of those assets is Bitcoin mining. So that's kind of been the main catalyst, I would say, in 2025. And the beautiful thing is, this tax code does not expire. So in 2020, if it's too late now to run this play, you could do it in 2026. You can buy Bitcoin miners, host them with Blockware, get a 100% tax deduction if you live in the United States. I can't vouch for tax codes in other countries, but in the United States, if you want a tax deduction, Bitcoin mining is going to be by far the best way to go.
Yeah, I was just going to ask, like, is this going to extend into the new year as well? But you just answered this question. Like, maybe one last dumb question, like when you say you can buy a Bitcoin miner and host it with Blockware, like, how does this work? Where is it hosted then? And then, like, where do I buy it?
Yeah. Yeah. So you go to our website, blockwaresolutions.com. We have a bunch of resources there, but the high level is we have data centers in Texas, Iowa, North Dakota, Missouri, Kentucky, Oklahoma, and Georgia, 7 different states across the country. And so we have pictures of the sites. We've got site tour videos. They're real data centers. I've been to them, boots on the ground. You have a real computer that you buy from us. You can either buy directly working with a sales rep, or you can go on our marketplace, which is very interesting because it provides real-time 24/7 analytics on the miners. So we'll have miners already on the rack, already plugged in. We're getting all this real-time data on their hash rate, energy consumption, revenue, and you can see all of that transparently before you make a purchase. The platform has Bitcoin on-chain, Lightning, debit card, credit card, bank wire, every payment method you could want. You could buy a miner that's already plugged in. All of the revenue that the machine mines goes to you. You pay for the power it consumes, and it's effectively hands-off for the client. So you get all of the benefits of mining Bitcoin, but you don't have to build your own data center. You don't have to deal with the heat and the noise and all the day-to-day maintenance of the miners.
That's great. Thanks a lot for explaining all of this. And yeah, we're having everything in the show notes below. And I guess, like, even if you use Last Noise More Signal code for your first miner, you get $100 off. So check this out for sure. And Mitch, thanks a lot for coming on. That was amazing, and for bringing the fire despite the cold that you caught. And yeah,
Thank you,
was
Pascal. Appreciate you having me on.
Yes, great. So and enjoy the rest of your, so to say, and then also, I guess, the rest of the year, and then happy Christmas, and talk to you in the new year again.
Yes, sir. Likewise. Merry Christmas.
Thank you. Have a good one.